This week, TikTok strikes a deal, but now the government says it isn't good enough. Plus, we've reached the end of yet another week without an agreement on additional coronavirus stimulus. So where do we go from here? And finally, COVID-19 infections are on the rise in Europe, and the World Health Organization says the climbing case count is a wake-up call. I'm Mackenzie Sagalos, and this is CNBC After Hours. September continues to be a bumpy month for the stock market, as all three big indices close out the week in the red. Now, I know that we keep saying that investors have been souring on tech stocks lately, but that's because it continues to be true. The Nasdaq, an index heavily weighted toward technology companies, is down more than 10% from its record high, which, by the way, was only September 2nd. And what about today in particular? Two stocks I want to mention: Oracle and Walmart. Both finished lower after the Commerce Department announced that the government will block downloads of Chinese apps TikTok and WeChat beginning on Sunday. Remember, Oracle reached a deal with TikTok earlier this week to become its trusted technology partner in the US, and Walmart was expected to take a minority stake in the new TikTok entity. But the government has to sign off on something like this, and right now, they're not. But there's still a lot of hope that a deal can be tweaked and go through. Even President Trump said so himself this afternoon. Now, while that's the case for TikTok, it's the exact opposite for WeChat. The massively popular Chinese app is vital to how U.S. corporations do business in China, since promotions and payments often happen on WeChat's platform. Not to mention the fact that it's the primary way American users communicate with Chinese family and friends. A senior administration official told CNBC that WeChat is, quote, dead in the U.S. So what will be the fallout after WeChat downloads are banned on Sunday? CNBC's Deirdre Boza explains.
Starting on Sunday, WeChat is going to be very restricted in the United States. You'll no longer be able to download the app or receive software updates. My understanding, at least, is that it will be slowed down, that the experience will not be as good. WeChat is in such a different position than TikTok because its user base is just 19 million people versus, hundreds of millions on TikTok. So it was interesting, the statement that Tencent gave us. They called the situation unfortunate. That was such a stark contrast to what we've heard from TikTok, saying that they're going to challenge. They completely disagree with the decision. And that's simply because WeChat's business here in the US is just so much smaller than anything it has going in China and other markets around the world. On one hand, now that we have some clarification, we know that this ban isn't as severe as it could be. That is, at least for users and for American businesses in particular. Now, where it is important is for users, many of them Chinese Americans that use the app to communicate with family back in China. So if their experience is delayed or shut down altogether, that's certainly a problem for them. The other way that this could affect US users is American businesses, and likely the small and medium-sized ones that use WeChat, not just for communication, but for payments, to sort out logistics. And in that sense, this is who the ban really hurts. It doesn't actually hurt Apple or Google, the Android and app stores, all that much, because users can still download the app where it matters, and that is in China. It's unlikely to affect big American multinationals like McDonald's, Starbucks, and Disney because they largely operate within WeChat in China. So the ones that really hurt from here is those 19 million users and businesses that rely on the app in America. There's a lot of consumer-facing American multinationals that do operate in China, but remember, there's a lot of American tech companies that do not operate in China because they've been unable to for, in some cases, decades, like Twitter, Google, Facebook, etc., etc. Some ways China has already acted, and this is the US retaliating, but what does it say about these different markets? China is a communist government, so it's not all that surprising when they ban US technology over there. The US is a democracy. We are supposed to have open markets. When we start banning Chinese companies, we start to look a lot like the Chinese. There may be a sigh of relief that the executive order and some of those guidelines that we got from the Commerce Department today did not touch on Tencent's investment network, which is absolutely vast. It ranges from household names such as Tesla, Snap, a lot of our American gaming companies as well. So for now, it looks like those are not going to be targeted by the Trump administration. However, However, we don't know what that's going to look like in the future. And for example, a company that just went public today, Unity, they use Tencent as a cloud provider, and Tencent is also one of their most important customers.
And now let's get to our sound check. Here's a timeline of this week in business told in just a few sound bites.
We did get a proposal over the weekend that includes Oracle as the trusted technology partner, with Oracle making many representations for national security issues. There's also a commitment to create TikTok Global as a U.S. headquartered company with 20,000 new jobs.
ARM is an extraordinary company. This is the company that built the world's most popular CPU. It has built 180 billion units over its course of its history. 22 billion of it just last year, and so they're in everything. They're in everything.
This is the largest undisrupted market in the US. It's $1.6 trillion. But despite that, it's completely fragmented, it's low convenience, it's low trust, it's low NPS, and a third of the people in the marketplace actually only do it part-time. And so this is where we found Open Door.
We are, as a large company, doing our best to help. I mean, we believe that if you operate in an environment, in a community, your goal should be to make that community better. And our small business grant program, this Making It with Lowe's program, is just a very small way for us to try to contribute to the communities in which we operate in.
I just got off a call with my colleagues. We are committed to staying here until we have an agreement.
And if the speaker is serious about staying in until we get a deal, let's start the negotiations back and hopefully help those people that are hurting the most during this pandemic.
The IPO is really not the highlight of my life. It's a milestone. We're here to build our business, to build our product. That's what we're excited about. That's what we do.
We're sticking to what we have said before, which is based on the current epidemiology, the rate of infection in the country at the location and counties where we have sites. We anticipate our base plan for efficacy for the first interim readout to be in November. That's our base plan.
No more PPP, no more money for airlines. We don't need it anymore. The fact is you have to let some of them go bankrupt, a consolidation. I am convinced that business travel will drop 15 to 20% even after the vaccine hits.
There's a very low prevalence right now in New York. I think New York can afford itself some ability to restart aspects of life, recognizing that they were able to drive down the infection for now. But I think we should be prioritizing trying to get the schools open and do that first and foremost and see how that goes. And clearly the city's been delayed in being able to do that. I don't think they had an effective plan in place on how they were going to do that. And you see them stumbling to try to be able to accomplish that goal.
And it does absolutely nothing about the fact that there is a giant data marketplace in the United States where China or anybody else can go in and buy all the same data that in theory we're trying to prevent them from getting with this deal. And they can obviously use Facebook and Google to get access to Americans in ways that, are analogous to what's going on with TikTok. And so this feels like a performance, and it feels like a performance where they haven't actually written the script yet.
All right, so we just heard Speaker Nancy Pelosi say that she intends to keep the House in session until a stimulus deal is reached. And we also heard the president's chief of staff say that he was ready to negotiate. So that all sounds great. But we still have no deal. No more money sent out to small businesses to tide them over until the world goes back to normal after widespread use of a safe vaccine. No more stimulus checks sent to individuals who are struggling financially. No more funds to keep state and local governments afloat as they face billion-dollar revenue shortfalls after spending massively on school and hospital plans. This kind of stimulus is really important, and not just for all those people we mentioned, but for the broader economy and even the stock market. Why? Well, because everyone is banking on this money coming through. And if it doesn't, that would change a lot of economic and market forecasts. The Federal Reserve Chairman warned Congress that America's whole economic recovery is essentially at stake.
I would say the fiscal support has been essential in the good progress we see now. And finally, I'll note that just about all, the overwhelming majority of private forecasters who project an ongoing recovery are assuming there will be a substantial additional fiscal support.
CNBC's Eamon Javers breaks down where we stand now in negotiations and how likely we are to see a fully passed coronavirus aid bill anytime soon.
So earlier this week, we saw the so-called Problem Solvers Caucus up on Capitol Hill. That's a group of Republicans and Democrats who are sort of trying to meet in the middle, propose a bill that sort of splits the difference in terms of the dollar figures between the $1 trillion that Republicans are at and the nearly $3 trillion that Democrats are at in an effort to sort of break the logjam here. We saw the president kind of embrace that proposal a little bit and signal that he'd be willing to spend a little bit more money here than he had been willing to spend earlier. Nancy Pelosi shot down this proposal. She only wants to do the big bill that she passed earlier in the year. She said she's willing to compromise a little bit off of that. But the big thing that Nancy Pelosi wants is about $1 trillion in spending for state and local governments, which have been so hard hit. Imagine the lack of revenue coming in to all these state and local governments as they're trying to finance hospitals, police departments, fire departments, teachers, all the rest of it, at a time when so many people are out of work. It's been devastating for them. Nancy Pelosi wants to focus on that. She doesn't feel that any of the proposals so far have gone far enough in terms of a big enough number on that. We saw the president sort of grab onto this proposal earlier in the week and say, hey, wait a second, I could go there or I could go even a little bit higher. That gives you a little bit of movement, but not a lot, I got to tell you. Remember, there are two things happening simultaneously, right? There's one effort to keep the government open. At the end of the month, the government funding runs out. If they don't pass a new bill, the government will shut down. Both parties say they don't want that to happen, and there are negotiations on what's called a CR, or continuing resolution, to simply keep the government's doors open. That's happening on one track. The other track is this question of additional stimulus based on the virus and the massive impact that's had on states, local governments, businesses across the country. Both of those debates are really impacted by this looming national election and the political calculations of both parties. What's been surprising to me about all of this is that all along I've been saying the incentives for both parties are to do a deal on both of these fronts, declare victory, and take it to the voters in November. That hasn't happened, largely because the president has been resistant to the idea of massive spending up on Capitol Hill. It just doesn't feel like there's enough movement to get to a deal and cut through the enormous political roadblock that we now see ahead of that national election in November.
Okay, let's get to our numbers round. First up is 10. Coronavirus cases are on the rise in Europe. The World Health Organization's regional director for the continent said that more than half of European countries reported a higher than 10% increase in new cases in the past 2 weeks. France, Spain, Montenegro, and Ukraine are all reporting spikes. He also said that weekly cases have now exceeded the numbers from March, when the virus first peaked. The WHO is calling this new wave of European cases a, quote, wake-up call as autumn approaches and brings flu season along with it. Next, 1,000. The price of face masks sold by Amazon jumped as much as 1,000% in the wake of the coronavirus pandemic, even after the company promised to curb price gouging in its marketplace. This comes from a report out by consumer watchdog Public Citizen. It's important because these products were specifically sold by Amazon and not third-party sellers. Other products that Public Citizen found to be overpriced are hand sanitizer, disinfectant spray, toilet paper, and paper towels, which were all things in extremely high demand back in March. Amazon said in a statement that these were pricing errors and that it had removed over 1 million attempts at price gouging in its marketplace. And finally, 50,000. Democratic Senators Chuck Schumer and Elizabeth Warren want to cancel up to $50,000 of student debt for all borrowers with federal loans in the wake of the COVID-19-induced economic crisis. Schumer and Warren claim that the rising unemployment and falling wages caused by the pandemic have made it nearly impossible for borrowers to repay their loans. According to the Department of Education, some 43 million American adults have a federal student loan, and the country's collective debt is at record levels, $1.5 trillion and counting. Of course, student loan forgiveness was a core tenet of Elizabeth Warren's failed presidential campaign. That's it for After Hours, but before we go, here's one thing to watch next week. Elon Musk is expected to reveal a new battery development on Tuesday, which has been dubbed Battery Day. Wedbush, a Wall Street investment bank, says that these announcements will be, quote, game-changing as battery innovations become a more and more important aspect of the electric vehicle industry. Now, for what it's worth, Tesla, which has seen astronomical gains this year, is actually down more than 10% so far in September. Catch all the news out of Battery Day by going to CNBC.com and downloading the CNBC app. We'll be back here next week in our home office on Tuesday, Thursday, and Friday with new editions of After Hours, so be sure to catch us then.